Yeah, UBS has really seen tremendous growth in the last 10 years. Now I know you're launching a new fund focused on impact investing. Tell us your strategy. When we spoke last, you were talking really about expanding the wealth management business, and that's what the company has done. Is that still the priority, Axel? And how do you continue raising that profile?
Absolutely, it's still the priority, and if you look at where we are, for example, we're the #1 Dow Jones Sustainability Index leader for the second year running. Having wealthy clients who very often have small, medium-sized companies, which made them rich and which are their economic fortunes, also requires you to help funding medium-sized corporations, and raising funds for that at the moment, like an impact investment or a growth fund for Swiss medium-sized corporates, is part of that overall focus on wealthy clients and on corporations that are the backbone of our economies and that have made many of our clients sort of rich over the years by starting these companies, by running them efficiently, and by internationalizing them. So doing these things, I think, is really part of our overall strategy. We're still the #1 wealth manager globally, and we want to grow that business.
Yeah, and so where are you in that cycle? I know since 2012, Axel, UBS has acknowledged some businesses have become less structurally attractive, shrinking the investment bank, for example, by 40%, reducing the legacy portfolio by, what, a whopping 85%. Where are you in terms of the cutbacks and the shrinking in some of these businesses? Are you almost done, or is there still more to be done?
Well, as you just said, on the non-core and legacy portfolio, we're very much done. The rest will be wound down over time. We had a very front-loaded adjustment. We de-risked the bank massively. We reduced our balance sheet, by an order of magnitude of 60%, 70% relative to pre-crisis. So the bank is in a much more stable place. We focused our business. We grow new business, in particular in the areas where we want to compete, wealth management, the #1 Swiss bank. And so we've had a strategy of transforming the bank over 5 years. With that, we're largely done. Now that markets are really difficult, you need to focus on cost, because taking cost out at this environment where you cannot influence revenues is the key thing for banks to be more profitable. And that's what we're focused on, and that's what we're doing. We have a 2.1 billion cost program. We're at roughly at 1.4 billion end of second quarter, so there's more work to be done. But a large part of what we wanted to do is behind us. But markets are difficult, so there's always continuous work. You need to refocus all the time. Are you still in the right place? Have markets moved, and does that require you moving again? We look at that every time, every quarter, and I think we still have a business model that works in the current market environment. So we're focused on implementing that.
So take me around the world, if you will, in terms of the central bank action, Axel. I mean, obviously, when you were at the Bundesbank, it was a very different environment. But now you look overseas, you've got negative interest rates in Asia, negative interest rates in Europe. What's your take on this? A lot of people worried that these central banks today are out of ammunition, and at this point, it's not going to come from the central banks in terms of stimulus for economies and markets.
Absolutely. So if you look at Europe and if you look at Japan, both central banks have an easing bias. I think there'll be more stimulus to come, but it's going to be slow because they've already reached the end of what I think is really a positive impact of this stimulus. Many central banks are starting to push on a string, and by now I think some of the overall benefits of these very expansionary monetary policies are starting to be strongly counterweighted by the side effects and by the impact on markets. There's strong price distortions in every financial market, but nevertheless I think central banks will continue to go down the road they are on. The only central bank that has moved slightly in an opposite direction is the Fed, but even if you look at the Fed's glacial speed of raising interest rates, you really cannot expect that the Fed will keep, at the end of the current cycle, a big distance from zero. So we're going to be in a very low environment of low interest rate, low growth, and low inflation for a long period of time, and that makes markets very difficult because volatility in those markets with massive intervention by central banks is going to be the name of the game for the next couple of quarters and years possibly.
So real quick, Axel, what are you telling your high-end clients then? You've got an enormous wealth management business, #1 wealth advisor. What are you telling clients now, knowing that the central banks are not going to be very helpful and markets are difficult?
Well, there's very few opportunities in fixed income. There's much bigger opportunities in equities, in particular in private equity. Illiquidity premia, I think, are a thing to look at for our clients. So we tell our clients to focus on the underlying economy, on corporates, and to help grow corporates. And, you know, our fund you mentioned that helps raising money for growth is part of that focus.
All right, we will leave it there. Axel, wonderful to see you. Thanks so much.
Thank you, Maria.
We
Have
will
a good
see you
day.
soon.
Thank you.
Axel Weber joining us there.